Hi everyone, in this chapters we will discuss the hire purchase transactions. So I have divided these chapters into two parts. In the first part, we will discuss the natures of the hire purchase transactions. Then we will discuss how you should prepare the journal entries for the hirer using the gross and net methods. And we will also discuss the accounting treatments for hire purchase transactions from the perspective of the hirer. So we will discuss three scenarios. The first scenario is how the hirer should record the transactions if the hirer renews the contract. The second scenario is about settlement of the hire purchase contract before maturity dates. And the third scenario is about the repossessions of the goods by the owner. Okay, so we are going to discuss all these three scenarios as we go about the chapters. So there is an act that is governing the hire purchase transactions. So if you check on the Hire Purchase Act 1967, it actually states that hire purchase agreements includes a letting of goods with an options to purchase and an agreement for the purchase of goods by installment. Okay, so that is the definitions of what hire purchase agreement is. Okay, so from legal view, what is hire purchase? So hire purchase is a system of acquiring goods on credit whereby the seller of the goods is regarded as the dealer, the purchaser is regarded as the hirer, and the finance company as the owner. Okay, so we are going to look into this legal view in the next slides. So if you look at these slides, okay, so this customer, he actually identifies a vehicles that he's interested to buy. So if he has sufficient of cash, he can buy the vehicles with cash, okay? But if he doesn't have sufficient of cash, what he's going to do is that he approach the bank for financing. Okay, so he's going to go to Affin Banks and say to Affin Banks, I'm interested to buy a car and can you give me a loan? Okay, so if he has a very good credit worthiness, so Affin Bank is going to purchase the vehicles. Once the vehicle is purchased, Affin Banks is going to rent the vehicles to the customers. While using the vehicles, the customer will have to pay for rental. Or in other words, we call the rental as installment on a monthly basis. Okay, so once you graduate, probably you are going to buy a car. Okay, so if you have sufficient of cash, you can buy the car with cash. Okay, but if you do not have sufficient of cash, what you're going to do is that you will need to approach a bank, okay, and then ask the bank to provide you with a loan. Okay, so the bank that is going to give you a loan that we call as the HP loan, hire purchase loan. Okay, so you will have to pay rental to the bank while using the car that the bank has bought for you. So that is basically what hire purchase is about. So there are a few key terms that you have to understand in order for you to see a clearer pictures on the hire purchase transactions. So the first term is the hire purchase price. So what is hire purchase price? Hire purchase price is actually the total sum payable by the hirer under a hire purchase agreement. Okay, so hirer is actually the person who takes goods from the owner under a hire purchase agreement. So let's say you are buying a car and you sign a hire purchase agreement. So you are the hirer. Okay, so the owner is actually the bank. So the owner is the bank is a person who lets a goods to the hirer under a hire purchase agreement. So the bank lets you use the car. Okay, so the bank is the owner. So the minimum deposit, alright, if you're going to buy a car, you should pay a minimum deposit of 10% of the cash price of the goods. There are some differences between the hire purchase and credit sales. So under hire purchase, the ownerships of the assets is not transferred to the hirer. Okay, On the other hand, for credit sales, if you buy an item or an assets under credit sales, the ownerships of the assets is actually transferred to the buyer. Okay, so under the hire purchase, if you are not satisfied with the assets, you can actually return the goods to the owner. Of course, the owner is going to charge you certain charges, so you will have to bear certain losses or expenses. For the credit sales, once you bought the assets, okay, it's very unlikely for you to return the assets back to the seller. Okay, for hire purchase, one of the unique features is that the owner can actually repossess the goods. Okay, but for credit sales, the seller cannot repossess the goods. So these are the differences between hire purchase and credit sales. So now we are going to discuss accounting for hire purchase in the books of the hirer. Okay, so the cost of assets under the hire purchase agreement, okay, if you have an assets, the cost of it is, in other words, we call it as the cash price. Okay, so in order to get the hire purchase price, the formula to get it is actually you take the cash price or the cost of the asset you plus with the total interest, or you take the deposits plus with the total installment amount. This is how you will get your hire purchase price. So when you are calculating the depreciations of your assets, okay, for your hire purchase assets, what you have to do is that depending on the depreciations methods that the company is applying, so you will take it, all right, the cost of the assets, and if it's a straight line methods, then you divide it over the useful life of the assets. Okay, so the methods of recording the hire purchase transactions in the books of the hirer, there are two methods. One is the net method and the other one is the gross method. So the interest rate for the hire purchase agreement is normally not more than 10% each year. Okay, so in order for you to get the total interest, once you identify the hire purchase price, okay, you take the hire purchase price, you minus with the cash price, so you will get the total interest. But if you want to get your hire purchase price, basically you take your total interest, you plus with the cash price. Okay, right. So your interest, there are three methods for you to calculate the interest. So the first method is actually the effective interest method. The second method is the sum of the years digit methods, and the third method is the straight line methods. So we are going to discuss all these three methods next. So let's take a look at illustration 1. So stated here is that on 1st July 2017, Abrik Berhad purchased machines under hire purchase agreement with Banker Berhad. So the company paid a deposit of 1,000 and further installments of 902 ringgit per month for 5 months starting on 31st July 2017. So the cash price of the machines is 5,400, the interest rate charged is 6%, and the effective interest rate is 0.83 per month. So the questions ask you to calculate the monthly interest expense using the effective interest method. So in order for you to compute the monthly interest using the effective interest method, the first thing that you have to do is that you need to calculate what is the hire purchase price. So we have discussed the formula to get the hire purchase price is actually the cash deposit plus with the installments. Okay, so the cash deposit is 1,000, is stated in the questions 1,000, and the total installment is 902 times with 5 installment. So if you add these two together, okay, you will get the HP price is actually 5510. As for the interest, once you get your HP price, you minus with the cash price. So the HP price is 5510, you minus with 5,400, the total interest is 110. In order to compute the monthly interest expense using the effective interest method, so first you need to determine what is the beginning balance. Okay, so the beginning balance is actually 4,400. So how do you get the 4,400? It's actually the cash price of your assets you minus with the deposits that has been paid. Okay, so if you take 5,400, you minus with the deposit space 1,000, so you will get the beginning balance, okay, is 4,400. Alright, so the effective interest yield is 0.83. So each month, the company will have to pay 902 as the installment for 5 months. So how are you going to get 36.52? It's basically 0.83 per month times with 4,400. You will get 36.52. Then you take the installment paid 902 minus with the interest. So the difference is actually the principal amount. Okay, so the balance 4,400 you minus with the principals, that would be the carrying amount, okay, for installment number 1. Okay, the balance at the end of first installment is 3534.52. Okay, so in the second installment, the company will still make 902 as the installment, and then you calculate the interest by taking 0.83 times with the last carrying amount, which is 35.34.52. You'll get 29.34. Alright, then you take the installment minus with your interest. That would be the portions for the principals. Then you take the previous month carrying amount, you minus with the principal, you will get the new carrying amount, which is 2661.86. Okay, so at the end of the installment, okay, which is at the end of period 5, the balance will become 0. Okay, so if you add all these interests together, you will get the total interest of 110. So for illustration 2, it's stated over here is that on 1st July 2017, Jobfast Berhad purchased a delivery van under a hire purchase agreement with banker. So the company paid a deposit of 20,000 and for the installments of 5,200 per month for 6 months starting from 31st July. So the cash price of the van is actually 50,000 and the interest rate is 8%. So the question asks you to calculate the monthly interest expense using the sums of the year digit method and also the straight line method. Okay. So to compute the monthly interest using the sum of the years digit method, first we have to compute the HB price and also what is the total interest. Okay, so the cash deposit as stated on the question is 20,000. The installment is 5,200 times with 6. So if you add these two together, the HB price is 51,200. So the total interest is actually your HB price of 51,200. You minus with the cash price of 50,000. Okay, so you will get the total interest is 1,200. So in order to compute the monthly interest using the sum of the years digit method, you need to identify what is the total interest first. So to compute the monthly interest using the sum of the years digit method, okay, so what you have to do is that first you need to determine, alright, this installment refer to which number of installment, okay. So for the first installment, alright, in order to calculate the total interest that you can amortize, what you have to do is that for your numerator, okay, this is your numerator, right, the top is the numerator, the bottom is the denominator. For the numerator, it's actually referring to the remaining number of installment at the beginning of that particular installment. Okay, so the remaining number of installment, alright, at the beginning of first installment is actually 6. Okay, so your numerator is 6. Then your denominator is actually the total number of installment. How do you get the total number of installment? You take n, alright, times with n plus 1 divided by 2. So n is basically 6. So 6 times with 7 divided by 2, you get 21. Okay, then you times with your total interest. So we have computed the total interest is 1,200. So you will get for the first installment, the total interest is actually 343. Okay, so if you are going to compute for the fourth installment, okay, so the remaining number of installment at the beginning of the fourth installment is 3. Okay, so 3 divided by 21, you times with 1,200. So the interest for installment number 4 is actually 171. So that is how you compute for the interest expense under the sum of the years digit method. As for straight line method, is much more simpler. Okay, so what you have to do is you take the total interest, you divide with the total number of installment. So the total interest is 1,200, you divide by 6, so you will get each installment, the interest is actually 200 per month. The hirer has two methods that it can opt to record the hire purchase transactions. First is the net method or the gross method. Okay, so under the net method, the interest charge is recognized directly against the hire purchase creditor account until the end of the hire purchase period. For the gross method, the total interest charge, you will have to record it as deferred interest at the commencement date of the hire purchase. So this deferred interest, you will then amortize it over the hire purchase period. So let's look at illustration 2. In illustration 2, the question states that on 1st July 2017, Jobfast Berhad purchased a delivery van under the hire purchase agreement with banker. So the company paid deposit of 20,000 and further installments of 5,200 per month for 6 months starting from 31st July 2017. So the cash price of the van is actually 50,000 and then the interest rate is 8% per year. So continue from illustration 2 using the sums of the years digit method. Prepare the journal entries on 1st July and 31st July based on the net method and also the gross method. Okay, so we are going to look into how you should record these hire purchase transactions under the net method and also the gross method from the perspective of Jobfast Berhad. So under the net method, okay, so on 1st July 2017, the hirer will record the assets at cash price. Okay, so the cash price is 50,000. So debit assets because the assets in, credit HP creditors of 50,000. These 50,000 represents the amounts that owes by the hirer to the owner. So on 1st July as well, the hirer makes deposits to the owner of 20,000. So we will reduce the HP creditors by 20,000. So you debit HP creditors, you credit cash of 20,000. On the 1st July 2017, the hirer actually make installments to the owner. Okay, so when you make the installment, you reduce your liability, which is your HP creditors. So you debit HP creditors 5,200, you credit your cash 5,200. So the hirer will also have to recognize the interest expense. Okay, so you will debit the interest expense 343, you credit the HP creditors 343. So how do you get 343s? 343s, if you refer back to the slides that we have discussed on the interest amortizations under the sum of the years digit methods. So in the first month, the interest expense is actually 343. So we get this figure actually from the slides. Okay, so what you have to note on is that under this net method, okay, so your interest charge is that you directly recognize it against the HP creditors account. So if you look at these last transactions, all right, so you will debit your interest expense, you credit your HP creditors. Okay, so that is what it is meant, that your interest charge is recognized directly against your HP creditors. So we will look into the gross method next. As for the gross method, the total interest that you have computed, you will record it as the deferred interest. Okay, so for gross method, you have an account that you call as deferred interest over here. Okay, so this is the accounts for you to record your total interest that you have computed, which is 1,200. So the deferred interest, okay, which is the 1,200, will be amortized over the hire purchase period. So let's say on 1st July, when the hirer purchase the assets under the hire purchase agreement, so the assets is in, so you debit the assets at cash price of 50,000. So you debit the deferred interest of 1,200, okay, and you credit your HP creditors at 51,200. Okay, so this deferred interest accounts is actually a contra accounts to your HP creditors. So in your balance sheet, all right, under your HP creditors, all right, under your liability HP creditors, you will state 51,200. Okay, so this 51,200, you will deduct it against your deferred interest. Okay, because the deferred interest is a contra accounts to your HP creditors. So 1,200. Okay, so the total net amount of your HP creditors is actually 50,000. Alright, so this figure is similar to the figures that you have got in the net method. Alright, the total HP creditors amount is also 50,000. Okay, so the journal entries on 1st July for the gross method, you will still have to record the payments of deposits that the hirer has made, which is 20,000. So you debit the HP creditors and you credit the cash of 20,000. Then on 31st July, when the hirer actually makes the first installment to the creditors, you will have to debit your HP creditors of 5,200 and you credit the cash. Okay. Then the interest that the hirer will have to recognize, the interest expense is actually 343. How do we get the 343? It's actually the amount that we have computed under the sum of the years digit method in the previous slides. So the contra accounts for this interest expense would be your deferred interest accounts. Okay, so under the net method, you will credit the HP creditors. But for the gross method, you will credit the deferred interest of 343. So what we have discussed so far is recording the HP transactions under the gross method or the net method. So now we are going to look into the situations where the hire purchase is completed as per the contract, or when the hirer fails to pay the installment, there is a defaults and repossessions. Okay, so we are going to look into these situations and what are the accounting treatments. So the Act actually said that the owner has a right to repossess the assets if the hirer fails to pay 2 installments consecutively or fail to pay the last installment, or if the owner feels suspicious that the assets will be transferred to another place other than the place which stated in the contract. Okay, so what this is trying to tell you is that if one day you buy a car and then you cannot pay the installment for 2 consecutive months, so the bank as the owner has the right to actually repossess the car that you have bought. Okay, or let's say you buy a car and then you actually stated that you are going to use it in Malaysia, but after using it for 2 years, you decided to relocate to, let's say, Singapore, and you are going to move the car to Singapore. Okay, so if the bank knows about this, okay, so the bank can actually repossess the car that you have bought. So in order for the bank to repossess the car, okay, or in other words, if the owner wants to repossess the assets, notice should be given to the hirer to notify about the repossessions. Okay, so the owner has the right to repossess the assets after 21 days of notifications. So the owner will actually give notice to the hirer about the repossessions of the assets. So the owner actually will possess the assets 21 days after the notice. If the asset is returned by the hirer within 21 days of notifications, so the hirer would not bear any costs related to the repossession, storage and other costs. Okay, so alternative is given to hirer. So if the hirer received the notice, alright, there are alternative that is given to the hirer. So what the hirer can do is that the hirer can renew the contract. The hirer can actually settle the contract before the maturity dates, or the hirer, if the hirer cannot pay the installment, what the hirer can do is let the owner to repossess the goods. For scenario 1, assume that the hirer is renewing the HP contract. Okay, so the payment to be made by the hirer is actually the installment in area plus with the interest in arrears, plus with any storage, custody or repair costs, plus with any repossession costs and redelivery costs. Okay, so if you add all of these costs together, that will be the payment to be made by the hirer under the conditions of renewal of the hire purchase contract. Under the scenario 2, assume that the hirer intends to settle the contracts before maturity dates. Okay, so let's say the maturity dates is in 2025. But at this point, let's say in 2021 June, the hirer decides that he is going to settle the hire purchase contract. Okay, so before the maturity dates in 2025. So the hirer needs to know the amount that he has to pay to the owner. So what is the amount that the hirer has to pay? Alright, so you can compute it based on this formula. Okay, so first you take the hire purchase price, you minus with all the payment that has been made up to that particular month. Okay, so the payments that has been made includes the deposit plus with all the installment that has been paid up to that particular month in which the hirer intends to settle the contract, minus with the statutory rebates. Okay, and then you plus with any storage, custody or repair costs, and also plus with any repossessions costs, okay, to settle the contract. Let's look at an illustrations on the computations of the payment that the hirer will have to make if the hirer settle the contracts before the maturity dates. Okay, so on 1st January 2017, Shalik Berhad purchased a drilling machinery under a hire purchase agreement with Fortune Berhad. So the cash price of the machinery is 70,000. The estimated useful life is actually 10 years. So the company paid a deposit of 20,000 and further installment of 4,375 per month for 12 months starting from 31st January 2017. Okay, so the interest rate charge is 5% per year. So the company uses the gross method to account for the hire purchase. On 15 September 2017, Shalik Berhad received a notice to repossess by Fortune Berhad due to its failure to pay the last two installments in July and also August. So 21 days later, the company decided to make a payment to settle the contract. Okay, so 21 days later, the company actually decided to make a payment to settle the contract. So the storage and repossessions costs to be borne were 200 and 350 respectively. So the question asks you to determine the amount to be paid by Shalik Berhad for early settlement, okay, and also to prepare the journal entry for the settlement of the hire purchase. Okay, so you have to prepare the journal entry. Okay, in order to prepare the journal entry, you need to compute what is the amount that the hirer under this condition, Shalik Berhad has to pay. In order to compute the payments to be made by the hirer, first what you have to do is that you determine what is the hire purchase price. Okay, so the hire purchase price is basically from the illustrations. You can know the deposit, okay, and then you plus with the total installment. So the deposit given in the illustration is 20k, okay, and the total installment is actually 12 installment times with per installment is actually 4,375. Okay, so your hire purchase price, if you add the deposits with the total installments together, you will get 7,500. Okay, alright. So then you need to determine what is the total interest. So the total interest is actually 2,005. How do I get 2,005? Is basically the cash price of the machine is actually 70,000. Okay, so I minus with 20,000 of the deposit. So the loan that the hirer gets from the owner is actually 50,000. Okay, so this 50,000 I then times with 5% of the interest rate. Okay, So you will get 2,500. So the total interest is actually 2,500 and the hire purchase price is actually 72,500. So the payment to be made by the hirer start off with you computing what is the hire purchase price. So in the previous slides, we have computed the hire purchase price, which is 72,500. Okay, then you have to minus the deposit plus the installment paid. So the company actually made 6 installment. Okay, so the company actually made the payment up to June. Okay, from January up to June, there are 6 installment. So 6 times with installment per month is 4,375. You plus with the deposit paid by the company, 20,000. So the total amount that the company can deduct is actually 46250. Then you have to minus with statutory rebates. So what does statutory rebates means? If you look at the meaning here, as stated on your slide, statutory rebates refer to the interest charge included in the hire purchase price but not yet incur. Okay, so if you draw a timeline, okay, so the company actually buy the assets on 1st January. Okay, and the company made the installment, the first installment on 31st January. Okay, so the company managed to pay for the installment up to June. In July onwards, the company actually defaulted in its payment. Okay, July and August, the company defaulted in its payment. On 15 September, the company received a notice of repossessions. Okay, so 21 days later, the company actually settled the contract. So it means that in mid of September, the company received the notice of repossessions, but 21 days later, it means in early October, all right, the company actually settled the hire purchase contract. Okay, so what is going to happen here is that from July to September, okay, so this 3 months period, the interest for this 3 months period, the hirer, which is Schlick Berhad, will have to bear for this interest expense. Okay, but because the company settled the contract in early October, okay, so from October onwards, all right, the interest for this hire purchase agreement, the hirer do not have to bear. Okay, so the contract actually ends in December. Okay, so it means from October to December, right, this 3 months period, the company do not have to bear the interest because the company actually settled the contract in early of October. So these 3 months periods refer to the interest for this 3 months period refers to the statutory rebates that the company can enjoy. Okay, so in other words, the 3 months interest from October to December, okay, the company do not have to bear the interest expense. So if the company do not have to bear this interest expense, we regard that as the statutory rebate. Okay, so how do you get the figure of 192? It's actually your N, all right, times with your N plus 1 divided by 2. So from October to December, the last 3 months, your N is actually 3. Okay, so 3 times with 3 plus 1 divided by 2. Okay, and then for your denominator, alright, you will take the sum of the total number of months of the hire purchase agreement. Okay, so the total number of months of the hire purchase agreement is actually 12 months. So it takes 12 times with 13, alright, divide by 2, and then you times with the total interest. Okay, so we have computed the total interest is actually 2,500. So if you use your calculator and multiply the amount over here, you will get the statutory rebates of 192. Okay, so this is the interest that is included in the hire purchase price, all right, but not yet incur. Okay, since it has not yet incurred, the hirer, which is Schlick Berhad, does not have to bear for this interest expense. So you regard this as the statutory rebate. Then you have to plus with the storage, custody, repair costs, and repossession costs. Okay, so these are the costs that the hirer has to bear. Okay, for its for for the settlement of the contract. Okay, so you add these two together, right? So in total, the payment that the hirer has to make is actually 26608. To record the journal entries for Shelix Berhad, you will have to debit the HP creditors by 26250. So how do you get the 26250? The 26250 represents the 6th installment that Shelix Berhad fails to pay. Okay, so 6 times 4375, you will get 26250. Then for the interest expense, alright, this interest expense represents the interest expense that Shelix Berhad has to bear for the interest for the month of July until September. Okay, so this is the amount of interest that Shelix Berhad has to bear. As for the loss on HP settlement, the amount is actually 550. So in order to get 550, you actually take the storage and repossession cost to be borne by Shelix Berhad. Okay, so this is the amount of the loss on HP settlement. Then you credit cash 26608. How do we get this 26608? This is the amount that we have computed in the earlier slides on the payments that the hirer has to make. Alright, and then for the deferred interest expense, why is it we credit the deferred interest expense? Because for these illustrations, Shelix Berhad is actually using the gross method. So if Shelix Berhad is using the gross method, you will have to credit the deferred interest expense for the remaining balance. Okay, so the remaining balance is actually the 6 months interest, right, from July until December. Okay, so if you use the sum of the years digit methods, you would add 6 plus 5 plus 4 plus 3 plus 2 plus 1 for July until December interest. Okay, and then you divide with the total interest, which is your sum of the numbers of month of the HP agreements. Okay, so which is 78, and you times with the total interest of 2500, you will get the deferred interest expense is 673. So for the third scenario, we are going to look into the owner repossessing the hire purchase goods. Okay, so how is it that you are going to compute the amount that the hirer will have to pay or the amount that the hirer will have to receive? Okay, so what you have to do first is that you compare what is the repossessed goods value plus with the total amount that has been paid by the hirer. Okay, you compare it with the total net payable. Okay, so for the repossessed goods value, you will have to take the best price that is offered by the owner or the price to be paid by a new hirer by cash. Okay, so either of these two price, then you minus this price with the repossessions cost, and you minus with the storage cost, and also you minus with the sales cost or the return of goods. Okay, and you plus that all this, you plus that with the total amount that the hirer has paid. Then you compare with the total net payable. For the total net payable, basically you take your HP price minus with your statutory rebate. Okay, so when you compare it, hirer can actually claim, okay, if the repossessed goods value plus with the total paid more than the total net payable. Okay, but hirer must pay, okay, if the repossessed goods value plus with the total paid is less than the total net payable. Let's take a look at one illustrations. So using the same information in illustrations 3, now the question actually said that on 10 of September 2017, Shelix Berhad received a notice to repossess by Fortune Berhad due to its failure to pay the last 2 installments in July and August. So the machine was taken back by the owner on 1st October 2017. and incurred the following costs, okay, such as the storage cost of 200, reselling cost 500, and repossession cost of 350. So the price of the machinery at the repossessions date was 30,000. So what they ask you to do is that you have to determine the amount to be paid or received by Shelix Berhad on the repossessions date and prepare the related journal entries on the repossessions date. Okay, so what are we going to do? First, we have to determine whether Shelix Berhad has to pay an amount of money to Fortune Berhad, or Shelix Berhad will receive an amount of money from Fortune Berhad. Okay, so we are going to compute that. So in order to determine whether the hirer will have to pay or to receive an amount of money from Fortune Berhad, so first you compute what is the repossessed good value plus with the total paid. So the repossessed goods value as stated in the questions is actually 30,000. Alright, then you minus with the storage, reselling and repossession costs. Okay, you minus 200, 500 and 350, and then you plus with the total amount that has been paid by Shelix Berhad, which is 4735 times with the 6th installment that has been paid from January until June, plus with the deposit. Okay, so the amount that you will get is actually 75,200. Then you compute the total net payable. So in order to compute the total net payable, you have to calculate the HP price. So we have calculated earlier the HP price is 72,500. Then we minus with the statutory rebate. For the statutory rebates is for the 3 months from October till December. Okay, so if you calculate the statutory rebates using the formula of the sums of the years digit for the months of October until December. Okay, so you take 3 times with 3 plus 1 divided by 2, alright, over with 12 times with 13 divided by 2, then you times with 2,500. So you will get the statutory rebates of 192. Okay, so you compare the two value, alright, the total amount paid and the repossessed goods value with the total net payable. Okay, so if you compare, if your repossessed goods value plus the total paid is more than the total net payable, so earlier we have said that if this is more than this, the hirer can claim the excess from the owner. So in our case here, it seems that the repossessed goods value and the total paid is more than the total net payable, okay, by 2892. Okay, so this 2892 is actually the amount that Shelix Berhad can claim from Fortune Berhad. So on 1st of October 2017, you will have to prepare the journal entries for Shelix Berhad. So on 1st October 2017, the journal entries that you have to record is debit the interest expense and credit the deferred interest. So this interest expense represents the interest expense for the month of July until September. So how do you get 481? You basically take 6 plus 5 plus 4 divided by 78 times with the total interest of 2,500. Then you need to recognize the depreciation expense as well for the month of January until September. So in order to get 5250, you will take the cost price of the machines is actually 70,000, and then stated in the question is that the estimated useful life is actually 10 years. Okay, so if you take 70,000 divided by 10 years and then you times with 9 over 12. Okay, why is it 9 over 12? Because from January until September you will have to recognize the depreciation expense for the machines. So for 9 months, so you take 9 over 12. So you will get your depreciation expense is actually 5250. So on 1st of October, you will have to record the journal entry for the repossessions of the goods by Fortune Berhad. Okay, so we have calculated earlier that Shelix Berhad will receive cash from Fortune Berhad of 2892. Okay, so you will debit your cash of 2892. Then you will also debit your HP creditors because your goods has been repossessed by the owner, so you do not owe the owner, which is your creditors, anymore. So you will have to reduce the amount of balance that you owe to the creditors by debiting your HP creditors of 26,250. So how do we get the 26,250? Is basically the installment per month times with 6. Okay, so you will get 26,250. 5375 you times with 6. Then you will have to remove your accumulated depreciations because the goods is being repossessed by the owner, so you will have to remove the accumulated depreciation as well as the machinery. So when you remove your accumulated depreciation, so you debit your accumulated depreciations, and the total amount of accumulated depreciations we have calculated is 5250. Then we also have to remove the machinery because the machine is being repossessed, right, by the owner. Okay, so you will credit your machineries. The cost price of your machinery is actually 70,000. Okay, then you will have to remove your deferred interest expense. Okay, so you have removed your HP creditors, you will also have to remove your deferred interest expense. So what is the amount of deferred interest expense that you have to remove? Is actually the last 3 months, okay, from October until December. Okay, so the deferred interest expense would be 3 times with 4 divided by 2, and then over with 78 you times with 2,500. Okay, so you will get 192 as your deferred interest expense. Okay, as for your loss on repossessions, one way of computing it is that you take the credit balance, okay, you minus with the debit balance, and then the difference is actually your loss on repossessions. But you can also calculate the loss on repossessions, okay, by first computing what is the carrying amount of the assets at the times of repossessions. So if you calculate the carrying amount of the assets at the time of repossession is actually, you take 70,000, alright, the cost of the assets, minus with the accumulated depreciations of 5250. So the carrying amount at the date of repossessions is actually 64750. Okay, so the value to repossess that the owner actually offers is actually 30,000. Stated on the question is actually 30,000. So this is the repossessions amount. Okay, so you have recorded in the book of the hirer at the amount more than the value that the owner is willing to offer you. Okay, so clearly the difference represent a loss because you recorded more than the amount that the owner is willing to offer you when it takes over your assets. So that is a loss of 34750. Okay, then you have to bear in mind that the storage, selling cost and repossession cost has to be borne by the hirer. Okay, so you will have to add all these selling costs, the repossessions cost, and also the storage cost. Okay, so you add them together, you will actually get 1050. Okay, because this is an expense that the hirer will have to bear. Okay, so if you add the loss plus with this expense together, you will actually get 35800. Okay, so this is the total loss on repossessions that the hirer has to bear, 35,800. So we have come to the end of part 1 of this chapter. So basically in these chapters, we have discussed about the nature of hire purchase, and then we discuss how to compute the hire purchase price and also the total interest. We have also discussed the interest amortizations method. There are 3 methods that we have discussed. The effective interest method, the sum of the years digit methods, and also the straight line methods. Then we discuss also the accounting treatments for hire purchase transactions from the perspective of the hirer. We actually discuss the difference between the gross and the net method. we also discuss the scenarios where the hirer renew the hire purchase contract, how you should compute the amount that the hirer has to pay. Okay, we also discuss on the issues of settlement of contracts before maturity dates, how you should compute the payments to be made by the hirer for settlements of contracts before maturity date. And then in the last sections, we discuss about the repossessions of the goods by the owner. How should you compute the amount that the hirer can claim, or the amount that the hirer must pay to the owner. Okay, so basically in part 1 we have discussed some of the key concepts as well as the accounting treatments for the hirer. Okay, so in the next lessons we are going to look into accounting for hire purchase in the books of the owner. So thank you very much for listening. I hope you are going to listen again and watch the video for the second parts of this chapter. So thank you again. Bye.